Every advisor shares this chart. And the chart is that the odds of the S&P 500 being higher over time increases dramatically if you zoom out. So we grabbed this chart from Exhibit A. The quote is, if you hold stocks over a 20-year period, nominally, you've never lost money. And it's powerful. And it does inspire, maybe not confidence, but it shows you stocks for the long run. But there is a huge and obvious counterpoint to this that occurred to me while I was listening to the Berkshire annual meeting. And Warren said something about the likelihood of a decline in stocks. Same thing. The longer you go out, you're almost guaranteed to have one. And I said, you son of a bitch. He did it again.
You son of a bitch.
So I called Matt immediately. And I told him, we got to flip this chart. And so for chart of the week, for Exhibit A, for advice.com, if you're a financial advisor, check us out. We're sending out charts of the week. And it's a new fresh chart every week with your logo on it. So what I had Matt do was show the odds of experiencing a bear market also increased by holding period. So it looks exactly the same. It's basically linear. So over any 1 year rolling period since 1950, you had a 1 in 3 chance of experiencing a 20% decline. If you go out to 15 years, it's 100% of the time. So yes, the message that advisors preach to their clients is stocks for the long run, less is more, keep your eye on the ball, the money's not for today. But this chart is equally, if not more important, because the facts are that those long-term returns are tough as shit, and they always come with setbacks.
Credit to you. This is a great chart. And I told you the one that I hone in on to highlight is 77% of the time over 5 years. So you'd tell your clients, listen, 80% of the time over a 5-year period, there's an 80% chance you're going to get a bear market. That is enough to, I think, help people understand the risk involved of either you have a steady hand and you hold, or you need cash, fixed income, something else in your portfolio.
By the way, look at 4 years.
Nice.
If a client says to you in 2024, after back-to-back 20% years, hey, asshole, why am I 60% stocks? What is this nonsense? Why are these bonds slowing me down? You show them this chart.
Yes, that's a great chart.
Credit to Matt. Credit to me.